Hey, Dave Knight here from 123daytrade.com. Thank you for watching. Thank you for being here. So this is the start of the concept called volume tick trading, or what I'm developing behind the scenes called beyond the website called volumeticktrading.com eventually. But for now, since you guys are part of the initial launching of this on my YouTube, you've been with me forever. I'm sharing this information out there basically for free right now. So always adding value and whenever I could for those that have already been with me the longest. So you're welcome. So what's this concept that we're talking about? Volume tick trading. And the other concept that I called is called volume tick study, correct? So VTS. So I just wanted to call it something different and put it into a course. And eventually it'll be a paid course, but right now you're seeing everything out there that'll be available on anyway, so let's get into it. So the concept that we're talking about right now, and the key right now, if I get my screen draw tool out, is volume. Volume is the key. All right. So if we believe volume is the key, what I want to do is set up the morning. So here's our spreadsheet. Let's go back to what the morning was, 1678. 1678. All right, so this was the morning as we came into it. Notice this is the open, and this is the morning, and my starting time on the crude oil futures market is at the 8 o'clock. Every time that I talk about, by the way, it'll be Central Standard Time. It'll be Chicago time, so think about it as Chicago time. Yes, I live on the East Coast, but I always refer to my trading because Top Step Trader is located in Chicago. The exchanges that I trade off of, most of, I know NYMEX is in New York, but let's not get into let's just assume from this point forward, everything is always Central Standard Time. So 8 o'clock a.m. is really 9 o'clock my time, but 8 o'clock a.m. Central Standard Time is when the crude oil market, the open outcry, with the former open outcry, comes into the market. Now Friday has a tendency to sell off, so we try to keep that bias to our advantage when we can put the advantage to this bias, to the advantage of the bias into play. So when we look at volume, this is what we see right now. So the first volume figure, high volume, let's go through this. 641 at 336, 833 at 611. So what do I mean? 336. So if we go back here and look at 3:36 a.m. in the overnights, it's right here, coming in here. I guess it was actually 336, 641. So that's the highest volume bar on the red side. The highest blue volume bar that corresponding with that is this right here, 833. Now, being a dark side, short side trader, the way I set this up is 833 minus 641 is 192. I'm favoring the short right now. So, and eventually you're going to see a negative number during this training itself so that you can see where the market could have turned around and you're looking at the long side of the market. Although I would it was a little bit late in the trading session. I don't recommend trading that late in a trading session trying to reverse on a Friday. All right, so let's go through this. Let's go. So the opening trade itself, after you can take a trade in the morning, and where I'm going to tell you to take that opening trade is where you see these lines and where I have this right here. 1708 would have been your opening trade to get into this market. What do I mean by that? Well, here's your 1, here's your 2, here's your 3, and you're taking that shot right there, trying to catch this market move. Now you're basically waiting at 8 o'clock, and the 8 o'clock mark comes right here. You're just waiting for the market to break through the 8 o'clock low before the 8 o'clock mark right here. And then you're taking on. Now this would have been a break-even trade, or maybe you had taken a loss on the trade itself. But regardless, that would have been trade number 1 that you should have taken. Being perfect, obviously. Now, trade number 2, where does that come in? I don't know if you can see that white line, but let's bring it across. Trade number 2 is here, and why is that trade number 2? So let's go through this. Where the high of the morning session was 1795. So let's go ahead and let's put horizontal line here at 1795. So this was the high of the session coming in. We see this volume right there, 733. So let's put that in, 733, and that came in at 8:44 a.m. If you just waited for the tiebreaker, this is the tiebreaker itself trade that I talk about. It gives you a greater difference than 499. So if you add these together, you're at 925. The tiebreaker is favoring the short. So you want to take on a short trade as close as you can to the top in this case. And what would be our risk? The risk on this trade, let me get my screen draw tool, would be it to come back over the high itself. So that's why this is a good setup to get in front of this. And you're taking advantage of this. Now, the exit point, we're going to go over what would be the exit point in a perfect world. We'll go over the exit point and how you would look at that. So there is your entry point coming in right there at 1774, $17.74. Now, we want to stay short until volume turns the other direction. And we see right here at 908, we have a high volume right there. What level is that? It's 772. So we plug that in, 772, and that came in at 908. Now look, now we're at 153, but if we weren't in a trade, this would be another tiebreaker scenario that you'd be looking at trying to get into another trade itself. But since we're already in the short, it's time at this point to move to at least break even on your trade. So once you saw this is where you should move to break even right here. Grab yourself a couple ticks, maybe about 5 or so to 10, and you're making yourself a profitable trading day on this session. Maybe you took a break-even trade on the first one. The second one here, let's go with 10 ticks. Let's just say it's 10 ticks. Our 5 over this would be 57. Let's go back here. Lowest low at this time, going to our blue bar. This is a 200 moving average on the tick chart, which puts it at 52. And we'll go 5 over that and call it 57. So this would be roughly your stop, anywhere between 57 to 64. Giving yourself, and let's just call it 64 for now, giving yourself 10 ticks, giving yourself a winning trade at this point after this prints. And why are we moving to break even? Because all of a sudden the market is going back to what's a little bit of indecision. We are looking at volume in a different light, giving us a trading decision and also one to tighten our stops up as well. Now, at 9:55, right here, we see our first volume bar that's over 1,000. And you'll notice I have a 500 volume bar on the volume, and this is a 1,000 volume bar. This is the first one that goes over 1,000, but more importantly, it's the first time in the trading session, so 8:44, 9:55. What do you see? It's a negative number. For the very first time in the trading session, the short side of the trade is in danger, and we need to really, really, really start to think about exit. Now, how do you exit this trade as a short side trader looking at this market? I would tell you failure of this line itself after it comes through. So then the way you are going to look at this to start with is taking the low of this market of where this bar printed, and at the least you want to come down to the to the blue bar right here, 1701 to 1699. You want to look at that 200 bar moving average coming down. So you want to tighten your stop. So before we're up here, and all of a sudden we want to be way over here and tighten our stop. So why are we tightening the stop? Very simply, our trade that we had, the short side trade, is in danger of closing out. And you can see that it does eventually go through here and closes you out. So if you would have held there, obviously 1699 gets run out. Now you see this line right here. So this could have been the exit, but once you break through here decisively, so to start with, on this move, you're coming down to your blue bar, right? Your blue bar, 200 bar MA. Now you see this gold line right here. This is a 50 bar MA. So all of a sudden you see where you could exit the trade on the way out. So there's different exit points that you could have come out of this trade and so we could have used this and come out through here. So I mean, once it breaks through this level right here, all of a sudden this is where this volume comes in, and you see where you call another fake out to the long side. So right here is a fake out on the long side based upon this volume, and then they push it forward. So your exit point going against the lowest low to here, this could have been your exit right in here, or you could have let this market right here against this, You could have looked at that and had been a little bit above there, or you could have went 10 ticks higher than here, and that's what this is based upon. 10 ticks higher than the low from here. So if you just want to look at it in a different way of looking at it, and it's 1682, and you're coming out at 1690. Well, I don't like coming out on even numbers. So it's 1693. So there's your exit point of the trade. So how much did we earn on this trade if you would have been able to get everything and been perfect? 774, oh, excuse me, 1774 less 1693 is 81 ticks. So this trade was worth 81 ticks. Now, our goal on this trade, when we first put it on, is 3 to 1. 3 to 1 today would have been 269 if we had got it all. So if we put in our short entry point, we were looking at when the trade was first put on, we were looking for the market to run to 1505 if it really wanted to sell off for a little bit, make new lows. So that, in a nutshell, is how I trade the TieBreaker. Hope this helps you in your trading. This is Dave Knight here from 123daytrade.com. Yes, this information will be going on my new website that I'm working up called volumetechtrading.com. Obviously, lots of work to do before I get to that point. Probably, I don't know, 30, 60, 90 days from now. This is Dave Knight again at 123daytrade.com. Thank you for watching. Thank you for being here. Bye for now.